Welcome back to the bull versus the bear. All right, today we're jumping right into one of the most controversial, most debated stocks on the entire market, Tesla. You know the one. You mention that name at a dinner party, and suddenly everyone has a very, very strong opinion.
And really, it all boils down to this one simple question. Is this a game-changing tech company that's building the future? Or is it just a car company with a whole lot of hype? Because depending on how you answer that, you either see Tesla as this incredible once-in-a-generation opportunity or, well, one of the biggest bubbles we've seen in a long time.
And I mean, to see just how massive that divide is, just look at this. This tells the whole story, doesn't it? On one side, you have serious analysts saying that company's worth maybe $47 a share. On the other side, over $2,700. It's staggering. How can two groups of smart people look at the same exact company and come to conclusions that are this far apart?
Okay, so let's try to understand this. We're going to start with the bull case. Let's step into their world for a minute and see what they're seeing. Because for them, this is about way more than just selling cars. It's about a company on the verge of changing, well, pretty much everything.
So you have prominent bulls like Cathie Wood who argue that if you're only looking at Tesla as a car company, you're missing the entire point. That's just the tip of the iceberg. The real prize, the huge opportunity they're talking about, is autonomous ride-hailing. We're talking about a potential multi-trillion-dollar market that could make the entire auto industry of today look tiny.
See, the bull case isn't just one single bet. It's built on all of these different pillars. You've got the huge AI and full self-driving play. Then there's the whole robotics division with that Optimus bot you've probably seen. And you can't forget the energy storage business, the power walls, the mega packs. All of this is happening while they're still expanding their EV leadership across the globe. It's a whole ecosystem.
And we are not talking about small side projects here. The Bulls models show all these ventures coming together to push Tesla's revenue to, get this, nearly $2 trillion by 2030. That is just a mind-boggling number. There are very, very few companies in the history of the world that have ever gotten close to that kind of scale.
So when you see a revenue projection like that, that's how you get to the crazy high stock price target. If you actually believe that $2 trillion in revenue is on the table, then suddenly a share price over $2,700 doesn't just seem possible, it seems logical, and it makes today's price look like an absolute bargain.
And look, the bulls will tell you this isn't just some pie-in-the-sky dream. They'll point right to the financials. The company has a really low debt-to-equity ratio, which is great to see, and its free cash flow growth is just huge. In plain English, that means they have the cash, the actual financial firepower, to fund all these big, ambitious bets on the future. All right, so that's the bull story. It's exciting, it's futuristic, it's massive. But now, let's switch gears completely and look at the other side of the coin, the bear case. And for the bears, it's time for a serious reality check. They see a very, very different picture forming.
The first big red flag for the bears, competition. The argument is pretty simple. For a long time, Tesla had the whole EV playground to itself. Well, those days are over. You've got the old guard automakers finally getting their act together, and you've got this whole wave of new, hungry competitors, especially out of China, all fighting for a piece of the pie.
And you can see this happening in a real time. Just look at California, which is a massive, crucial market for electric vehicles. Tesla's market share there has already dropped below 50%. For a bear, that's not just a statistic, that's proof. It's a flashing warning light that Tesla's iron grip on the market is starting to slip.
And while the bulls point to a strong balance sheet, the bears point to the income statement, and they see some troubling trends. Net income growth has fallen off a cliff. And when you look at how efficiently they're using their money, things like return on equity, those numbers have gotten a lot weaker than they used to be. The bears would say, hey, this doesn't look like a hyper-growth tech company anymore.
Okay, so forget the spreadsheets for a second. The bears say, let's just follow the money. What are the people who know the most about the company? The executives, the big institutional investors, what are they actually doing with their own money?
And this is what they'll show you. In the last 12 months, just one insider buy. At the same time, you have 135 big investment firms that have dumped their entire stake. They've liquidated everything. So the question the bears ask is pretty powerful. If the future is so bright, why aren't insiders buying, and why is the smart money running for the door?
And it doesn't stop there. The bears see a whole pileup of operational headaches. You've got the recalls and production struggles with the Cybertruck. You've got negative headlines about safety. You have the massive question of whether they can even deliver on those grand promises of full self-driving and robo-taxis. And of course, there's the distraction factor. For a bear, that all adds up to a ton of risk. So, okay, we have these two completely opposite stories. This brings us right to the core of the whole debate, the valuation. How in the world do you put a price tag on this company? It really feels like the bulls and bears aren't just looking at different data, they're on different planets. And it all comes down to how you decide to value it.
So the bears, they tend to start with a very traditional, old-school method. It's called a discounted cash flow analysis, or DCF. Basically, it's a super straightforward approach that ignores the hype and just asks one question: how much actual, cold, hard cash is this business going to generate over time?
And when you look at Tesla through that lens, just focusing on the cash, the numbers are, well, they're pretty brutal. Most standard DCF models spit out a number that says the stock is wildly overvalued. We're talking more than 178% overvalued, which leads you right back to that $47 fair value we saw earlier.
And here's another way to see just how disconnected the valuation is. Look at the price-to-sales ratio. The market values Tesla at almost 15 times its annual sales. Now compare that to the average car company, which trades at basically 1 times its sales. The bears look at this and say, wait a minute, if they sell cars, why are they being valued like a company from another galaxy?
So this is what we're left with: 3 totally different realities for one single stock. You have the bear case, grounded in today's numbers, saying it's worth less than $50. You have the bull case, built entirely on a story about the future, saying it's worth over $2,700. And then you have Wall Street basically shrugging its shoulders and picking a number somewhere in the middle. It's just wild. So, that brings everything back to you, really. And it leads us to the single most important question you have to ask yourself when you look at a stock like this. At the end of the day, where do you stand? Do you invest based on the hard numbers we can see and touch right now? Or do you invest in the story of what could happen tomorrow? Are you a bear, focused on current financials, competition, and cash flow? Or are you a bull, buying into a narrative of AI, robotics, and a multi-trillion-dollar future? That's the choice.
You know, whether this whole thing ends up being one of the greatest triumphs of innovation we've ever seen, or a classic cautionary tale about hype, well, that final chapter hasn't been written yet, and that's probably the only thing the bulls and the bears can actually agree on. This story is far from over.
Hey, if you enjoyed this breakdown, do us a favor and hit that subscribe button for the bull versus the bear. We'd love to have you join us for our future analyses. And you can check out our next stock breakdown right over here. Thanks for watching.